People think that the dollar is going to continue to reign supreme, and that's just not the case, especially when you have things like BRICS going on. My name's Carlos Dixon, originally from Tampa, Florida. I started investing into crypto back in 2018. The advantage of being a long-term investor is that you're guaranteed to make some sort of a return. You just don't know when that return is going to come. The more exchanges you can find it on, the better, because that means it's a well-known crypto. Always remember the phrase, not your keys, not your crypto. Meaning if you don't own the private seed phrase, then it's not your crypto.
Yo, what's up guys, welcome back to the channel. And on today's video we got a pro crypto trader in the house. We got a pro crypto trader to come and share some valuable game and review what are some of the top tips he uses to make over 10k monthly from trading cryptos alone. So yeah, I'm recording this video after the interview, but yeah, after the interview Carlos was able to help me get started with trading crypto. So yeah, I really appreciate it, Carlos. And also in this interview we talked about what platforms he would recommend to get the latest news regarding crypto, how to start trading cryptos with limited capital, and what are some of the top tips for choosing the right cryptos to trade. But yeah, Carlos, just a heads up guys, Carlos is a very busy man, but yeah, he was able to keep his promise and he was able to join us on this interview. So yeah, shout out to Carlos for joining us on this interview, and also shout out to Todd for linking me up with Carlos. All right, shout out to Todd for linking me up with Carlos. Let's get into this interview. Welcome.
Yes, sir.
For the people who don't know who you are, who are you?
My name's Carlos Dixon, originally from Tampa, Florida. I live outside the country now in Colombia, South America. I started investing into crypto back in 2018, roughly. I traded a bit in Forex as well, trading currencies, if you didn't know what that was.
For the people who are just hearing crypto trading for the first time, right? What is it and how does it work?
Crypto basically is a form of digital currency. It's an asset that will be used in the future to facilitate transactions pretty much on the blockchain. And it's all digital. So, a lot of people are going to be using this for everyday transactions and everyday things in life as well, because crypto is just not for monetary or financial transactions. It's not made just for that. You have projects like Deeper Network, which is decentralized VPN. You have Ethereum, which is a blockchain that other cryptos are built on. Bitcoin even is the top dog, and that is a store of value. So it's much like a digital gold. So for the audience purposes, it's digital transactions on a blockchain.
What was the most you have ever made in a single day?
Crypto trading, crypto and Forex trading, because I did them combined. And in a day, I probably made about $1,100.
Damn, that's a lot. A single day, wow. So you mentioned,
and I made that in a short amount of time too. It wasn't even 3 hours, I think. Yeah, 3 or 4 hours. I made that kind of money. Yeah.
So you mentioned Forex trading, right? What is that?
Currencies: Swiss franc versus the U.S. dollar, the U.S. dollar versus the Japanese yen, the gold. You could trade oil. You could trade SPX. That is our indice for the stock markets. But yeah, it's basically all currency trading. That's what Forex is.
So what is the difference between Forex trading and crypto trading?
Crypto is digital assets versus Forex is the currencies, like the dollar, the paper dollar that people be spending, or the paper, whatever country you from in the national denomination for currency is. That's the difference. So
before I asked you how much you made, like how much you made in a single day, you made over $1,100 in a single day, right? So what do you think you did differently that day compared to the rest of the other days?
I was just doing a lot of scalping the market, just taking a lot of small wins, as I saw the market going up. So I was basically watching the chart for the entire time I was in, and every time I saw my account go up, I just took the profit, or whatever. So that's pretty much how I did it. It wasn't no strategy or rhyme or reason to it. I was just watching the chart and took the profits when I saw it was time, when I felt like it was going to, get ready to make a move back down with it and I lose a little bit or whatever the case may be. So yeah, but I do different. At the time I was just learning, so probably nothing, I know more now, about setting stop losses and setting the area to take a profit and, how to read a chart and stuff like that. So if I were to do the same thing today, I'll probably go at it about a different a little different than I did back then.
Can you just walk us through the process of buying and selling cryptocurrencies?
Identify whatever crypto it is that you were interested in purchasing, right? Once you identify the crypto that you want to purchase, you want to be able to research on that crypto, see what the digital asset that you're putting your money towards. After you do that and you feel comfortable with whatever it is that you are researching and you want to move forward, then you would need something called a crypto exchange. Okay, a crypto exchange is nothing more than a place where you can purchase crypto. So in the stock market world, it'll be similar to a Robinhood or you Webull or Charles Schwab, Fidelity, wherever you can buy any stocks or something like this. In crypto, we talking about Coinbase, Uphold, that's what I recommend, the Uphold wallet. The Uphold exchange, because it comes with a wallet that you can control. Gemini, crypto.com, these are a few crypto exchanges where you can buy crypto exclusive, and no other form of asset. So once you make it to that point, you have to create an account. They got this process called KYC. It's called Know Your Customer. You have to submit your identification, maybe take a selfie or something like this, so that way they can identify who it is that'll be using the platform to purchase crypto. And after that, then there's something called a cold storage wallet or hot wallet. Hot wallet is attached to the internet. Cold storage wallet is not attached to the internet. Both of these types of wallets, you own the private seed phrase of private keys to, so you will be able to custody or take care of your own crypto projects or whatever, as opposed to allowing Coinbase or Gemini or Polar, any one of these exchanges that I named, custody of crypto for you. So always remember the phrase, not your keys, not your crypto. Meaning if you don't own the private seed phrase, then it's not your crypto. For an example, if a crypto company goes defunct or goes under and your crypto is locked up on there, chances of you getting that crypto back is slim to none. Why? Because you didn't own the keys to the crypto. But as long as it's in a wallet where you own the keys, then it's your crypto, regardless of what anything happens or if anybody does anything. And then and that's pretty much it. So after you have it stored in your private wallet, you know what I'm saying? And then, you hold on to it for as long as you're going to hold on to it, or sell it when you feel like you need to sell it, or whatever the case may be. So, yeah, that's pretty much in a nutshell the process of, getting to the point of purchasing and owning the crypto.
So what are some tips for choosing the right cryptos to trade?
You want to look for crypto projects that has a use case, meaning that it's solving a problem. You want to look at the same cryptos. You want to look at the development team, who are the people but that's behind this particular project. Look them up on LinkedIn or something. See if they see if there's a scamish vibe to it. You want to see who they are partnered with, meaning the crypto project itself. Is it some big names behind it, right? Because you have a lot of organizations and institutions that's now adopting crypto into their everyday products. You know what I'm saying? And if you got a big name company like Johnson and Johnson or Boeing, for an example, that's backing a particular crypto, that might be something that you want to look into. So, just recapping, those three things I said was, looking at the development team, looking at who they are partnered with, and also seeing if there's a use case is solving any problem. And you always want to also look at the price point, you know what I'm saying, because that also is going to play a role in the individual's way of thinking, if they can afford it or not. So price is always something you want to look at too. And then I'll probably say the last thing that you want to look at, how many places can you obtain this particular crypto? How many exchanges that you can find it on? You know what I'm saying? The more exchanges you can find it on, the better, because that means it's a well-known crypto. But on the flip side of that, if it's not on a lot of exchanges, it may be an exclusive crypto, and it might not be for everybody to be able to get access to. And there's a lot of cryptos out there that are very, very good, but a lot of people can't get access to them for one reason or another. So, that's what I would say,
Okay.
to look for when studying or looking at cryptos.
So wait, so what do you mean by exclusive? I'm just a bit confused on that one. I mean, exchange. What do you mean by exchange?
When I say exclusive, meaning that it's not on a lot of exchanges. If you're looking at a crypto, for an example, there's a crypto project that I like called XDC. XDC. This crypto is not on Coinbase. This crypto is not on Gemini.com. This crypto is not on crypto.com. It's not on all of the American exchanges that people have access to. This particular crypto is not on there, but it's on Uphold, and it's on decentralized exchanges. These decentralized exchanges are exchanges which I don't want to get into in depth with, but anyway, the decentralized exchanges are not tied to a federal government banks. You know what I'm saying? It's not tied to that. But anyway, a lot of those cryptos, you would have to do what they call a swap. You would have Ethereum, Solana, or whatever it is that you're going to swap it against to get that particular crypto on a decentralized exchange. I mean, to answer the question directly is that, exclusivity, meaning that it's not available on a lot of exchanges.
And what are some strategies that you use to minimize risk in crypto trading?
Studying the market. You have to study the cryptos that you're trying to invest in. I lost money, in crypto, dealing with certain projects, but not a lot. Just that's really the main thing, to minimize your risk. Because investing in crypto overall in itself is a risk because it ain't fully regulated yet. So just investing in the crypto market is a risk. But to mitigate a lot of that, you just got to do some studying, man. Know what you putting your money in, and if you know what you putting your money in and then you put it in there and then you take a loss off of that, then you won't feel bad about it because you did everything that you could do in order to be able to make sure that you was putting your money into what you feel like is a solid project. Mm-hmm. Outside of that, with crypto, there's not much you can do in the way of risk mitigation until the market has been fully regulated.
The people who are very, very emotional, very attached to what cryptocurrency they buy, right? How do you manage to control your emotions and avoid impulsive buys and sells in crypto trading?
Because I go in with a certain amount of money that I know I'm going to invest in this particular project, and there's nothing more. So if I know that I'm going to take $250 and put it on a project like Solana, then that's just what it's going to be. And I'm going to sit there and watch it and let it do what it does. And that's it. You know what I'm saying? I'm not doing nothing else after that. So that's how I control my emotions. I don't care about the price action because I invest for the long term. I'm looking at long-term value as opposed to the short term. Mm-hmm. People who look at short-term value, they emotionally invest. They see the price action move going up or down, and they feel like they got to buy more or sell because of that. I don't do that. I look at a certain price point. I want to buy it right here. And if I see the price point, then I buy it right there. And I'm not putting no more than what I said. You only put in what you can afford to lose.
And I know that the crypto market is very, very unpredictable and very, very volatile, right? So how do you manage the unpredictability of the crypto market?
You can't manage unpredictability. Like I said, you dollar cost average into projects, meaning I got $20 a week. I'm going to invest in some crypto or a crypto. You know what I'm saying? And you can't really worry about the volatility of the crypto market. You're going to invest in. That's why long-term, in my opinion, long-term investing in the crypto is the best case scenario for anybody because you don't know or cannot predict the volatility of the crypto market.
So you mentioned, long-term investing, right? So what are some advantages and disadvantages of trading long-term versus short-term?
The advantage of being a long-term investor is that, you, at least with crypto, in my opinion, you're guaranteed to make some sort of a return. You just don't know when that return is going to come, and that would actually be the disadvantage, not knowing when you're going to see those returns for a long-term investor. Short-term investor, the advantage is that you can get the money now. You know what I'm saying? You can make your money right now within 3-4 hours or 2 days or however long you want to do it. And but the flip side of that, or the con to short-term investing, is you can lose that money just as fast.
So what tools and platforms do you recommend for tracking and analyzing the crypto market?
CoinGecko is one of my favorite ones. CoinMarketCap is another one. So those two aggregators are basically where I would start my crypto research. That's CoinGecko or CoinMarketCap. Both of those is you could go search the top whatever cryptos in whatever sector and and research from there. So that's going to be a large help And then, I got some other tools that I use, but that's more so for, advanced trading or investing and stuff like that. But just for somebody who's just getting started, CoinGecko and CoinMarketCap is the perfect place for you because they have it broken down in a way that anybody can understand it.
So how do you manage to stay updated and informed on the latest news regarding crypto?
I'm subscribed to a bunch of crypto news sites. Bitcoin.com or Bitcoin Magazine is one of them. I use decrypt.com. CoinGecko even have newsletters. I watch I watch a couple of different YouTube channels. MSNBC, they have a crypto world segment. So that's why I get my regular news for crypto. That's where I get that from. But yeah, but that's pretty much it. Subscribe to a bunch of different crypto news services and watch stuff on YouTube.
What are some common mistakes that you notice from crypto beginners?
Not researching, giving your money to scammers, not fully vetting who are you talking to. Not ever it should be any time to where you should be giving money to somebody to say, make some money for me in crypto. Or are you taking some advice from somebody who's telling you that, if you give me 300, then you can make 200% and all this other kind of stuff. Those are very, very common mistakes. Getting fished on emails, basically letting people scam them, ways of saying I can make you money, and then not doing full research on, whatever crypto it is that they're trying to invest in. They just go in head first without asking. So those are definitely two common mistakes that I see.
For the people who have limited capital and are interested in getting into crypto trading, what advice do you have for those people?
You can buy Bitcoin for as little as $1 on Cash App if you got Cash App. So if you got limited funds, like very limited funds, I just tell you to start there. Go on your Cash App, go to Bitcoin, set your account up to take out $1, $2, or $5, whatever you can stand every week, and buy you some Bitcoin little by little until you're able to get to the point to where you can drop $200 or $500 or $1,000 on one crypto project or something like that. Everybody need to know that you don't have to have a whole lot of money to invest in crypto. And, it's been cases where some people invested $50 and made $500,000. You know what I'm saying? I mean, that might be astronomical. It happens. You know what I'm saying? It's not people invest a small amount of money in certain things. A lot of luck probably was involved in it, but it has happened. But my point is that you don't need a lot of money to invest in crypto. Some of y'all go out and buy Chipotle chicken bowls for $10, $15 twice a week. You could cut that in half and eat your peanut butter and jelly sandwich for those 2 days. You know what I mean? And take that same $25 that you just spent at Chipotle and buy you $25 worth of Bitcoin or whatever other crypto. So you got to start looking at it from that perspective, you know what I mean, for those of whom say they have limited resources. Because you don't really have limited resources. It's where you putting those resources is what I would say. A lot of people, because some people got drinking problems. Some people have smoking problems, Some people like to buy activity, you know what I mean, for sexual pleasures and stuff like this. All that money right there is money that you could be putting into digital assets. Simply put, a lot of people, you could carpool. If you got a $200 Uber bill every week, you know what I'm saying, you could cut that in half, you know what I'm saying, ride a public bus if you're trying to get into crypto, but I'm just saying all that to say that there's alternatives for those of who say they have limited resources, because that's not really the case. You just got to repurpose your resources.
Okay, so can you share a trading loss that you experienced and what you learned from that loss?
Was trading gold one day. I had made a good amount of money, not a lot of money. I may have made like $400 or $500 that day trading gold. And so I got overzealous. And the next day I thought that because I made that kind of money the day before, I was going to be able to do it again. So I ended up losing all that. Well, most of it, about 70% of what I had gained. I lost it all, because I didn't, do what I had learned now, how to set stop losses and take profit marks, and I thought I could just, set it and walk away and then come back and my account be still in the green. That just wasn't the case. It was in the red, and the reversal had, took out most of the profits that I had made the day before. So what I learned from that is, you have to be more careful and you have to pay attention to what you're doing and use the indicators that you're trading with in order to be able to make sure that you don't fall into positions of taking large losses.
What are some misconceptions about crypto, and what do you think of those misconceptions?
Well, one of the largest misconceptions is the fact that only criminals use crypto, which is far from the truth. At once upon a time, because of the dark web, you have people that use Bitcoin to make illicit purchases or whatever the case may be in the dark web. But, I think that now is being used more for a scare tactic to keep people from investing in crypto, because you see what's going on in the world today with the current economic climate. You know, people think that the dollar is going to continue to reign supreme, and it's just not the case, especially when you have things like BRICS going on, and people creating their own currency avenues and ditching the petrodollar and stuff like that. So um, that misconception about it being used for illicit activity is definitely false. People only calling it a scam because they don't understand it. They don't know it, but that's their fault. Crypto is literally being used every day now, on some scale. Right now, it's being used for payments. So, and if crypto was a scam, then why hasn't it disappeared? It's been 15 years, 16 years almost. Why hasn't it disappeared? So all of that talk right there, misconception talk, those are people, to me, either want to mislead people intentionally, or they don't know nothing about crypto.
So I know that there are hundreds of cryptocurrencies out there. So how important is diversifying your crypto portfolio?
You want to be able to diversify your crypto portfolio because you want to have exposure to however many cryptos you can have exposure to that's, actually solving a real world use case. You don't want to have your eggs all in one basket. That's what my mom used to tell me that all the time growing up. Having multiple cryptos that could be potential for you to, create a wealth avenue for you and your family is definitely the way to go. You just don't want to be stuck on one. That's just really what it is at the end of the day. There's no real elaborate answer for that. It's no different from being diverse in any other type of investment situation, the investment wheel that one would have, access to. So, people who invest in the stock market don't have just one stock they sit on. Or if they do, they're getting paid dividends off of it.
What resources do you recommend for people looking to deepen their knowledge and understanding of the crypto trading market?
Man, like I said, CoinGecko and CoinMarketCap. Trust me, you can start right there, man, and you go down the rabbit hole. I can give people tools all day long, but if you don't know how to use them, you know what I'm saying, then it's going to be pointless. These two resources for crypto research will lead you to different situations to help you to be able to understand how to invest in crypto.
And let's say there was a person watching this video right now and was very, very inspired by your story. What is the best advice you go for that person?
Nothing is going to happen without action. If you don't take action, then you're not going to see any results. So I would say, if you're looking at this and you inspire anything by what I said, the first thing you got to do is take the step. You can talk about it, or you can, go research about it or learn about whatever all you want to. But if you never take the step to do it, then it's going to be for nothing. So take the first step, man, and jump out there, sink or swim.
All right. So there was a question left for you from the last person that I interviewed. And the question is, how do you improve yourself every day? And what are you going to do in the next 24 hours?
Well, I read. I try to invoke a lot of positive energy in the situations where I am. And, exercise, drink a lot of water and read the word of God. You know what I'm saying? What I'm going to do for the next 24 hours? Rest. So as you know, tomorrow in America, there's a holiday, Labor Day. So, I won't be doing anything. You know what I'm saying? Just be resting. Probably reading through a few articles about crypto, though, and stuff like that. But outside of that, yeah, that's pretty much it.
And what question do you have for the next person that I interview?
The next person that you interview, I want to ask that person, how long is it going to take you to invest in crypto? And if you have already invested in crypto, what did you invest in?
And guys, for the people who are watching this video, Carlos is a very, very busy man. That's why like you see him like on the move right now. He's a very, very, very busy man. So yeah, I really appreciate your time and like you actually taking the time out of your day to join me on this interview. It was great talking to you, man. I really appreciate it.
Sir.
All right. Okay, bye.